Hi, everyone. My name is Yaritza, and I'm the Senior Finance Manager of Payment Operations here at Scout. And a big part of what my team supports is making sure patient payments are processed efficiently while also ensuring that the appropriate tax reporting requirements can be met when they apply. Today, I do want to take a little bit of time to talk about why tax reporting matters in patient payments, some of the challenges teams commonly face, and how Scout helps support that process. As we know, whenever patients receive compensation related to a clinical trial, those payments can create tax reporting obligations depending on several factors. These requirements can vary based on the country where the patient is located, the type of payment being issued, and the total amount received over the course of the year or the study. In the United States, for example, reporting thresholds apply once payments reach certain levels. Beginning in 2025, however, the federal reporting threshold for certain payments increased from $600 to $2,000. And that change is still relatively new information for many organizations. Because of this, it's important for teams managing payments to have visibility into taxable payment activity and truly understand when reporting requirements may apply. Without that visibility, reporting obligations can sometimes be discovered much later than expected. Another factor that makes tax reporting complex is that patient compensation can come in many forms. Payments may include reimbursements for travel, stipends related to study participation, or compensation tied to a specific study activity, for example. Depending on how those payments are structured, they may be treated differently from a tax reporting perspective. Because of this, simply issuing payments is not enough. Teams also need to ensure that payment activity is tracked appropriately and that the necessary information can be collected if reporting requirements apply. Without a clear process in place, organizations can sometimes find themselves trying to reconstruct payment activity months later in order to determine which patients may have crossed those reporting thresholds. What we often see here is that tax reporting becomes more of a afterthought. Payments may already be going out, patients may already be enrolled, and only later may the question come up. Do we have the proper information for tax reporting? Are we going to issue 1099s? Do we even know if we have the proper information, or do we know if any of our patients have met those thresholds to issue out 1099s? At that point, teams may need to go back and gather information, reconcile payment totals, and determine which patients may have crossed that reporting threshold. That process can become time consuming very, very quickly. And I speak from experience. Not only does it create additional administrative work, but it can also introduce compliance risk for sponsors and sites if that reporting obligation was identified just a bit too late. Another challenge with studies is scale. Clinical trials often involve multiple sites, large patient populations, and in many cases, global payment activity across different countries. When payments are being issued continuously throughout the life of a study, it becomes increasingly difficult to manually track how much compensation each patient has received and whether reporting obligations may eventually apply. Without a structured system in place, teams sometimes end up relying on spreadsheets or manual reconciliation to track payment activity. Over time, this can increase the risk of errors or inconsistencies in how those payment totals are being tracked. Can also create a lot of confusion for patients who may suddenly be asked for additional information well after payments have already started or even been completed for certain patients. In many cases, the challenge isn't that teams don't want to handle tax reporting properly. It's simply that tax reporting considerations weren't integrated into the payment process from the beginning. Now, this is where we come in. Here at Scout, tax reporting is considered as part of the payment infrastructure rather than something addressed only at the end of a study. We track taxable patient payments throughout the life of a study and maintain records that allow sponsors and sites to understand when reporting thresholds may be met. When required, Scout collects the necessary tax reporting information so that those reporting obligations can be fulfilled appropriately. For US patients specifically, Scout supports required reporting by issuing the appropriate documentation, such as 1099s or 1042 reporting when applicable. Sponsors can also request the reporting visibility so that they can better understand taxable payment activity across all of their studies. This visibility truly allows sponsors and sites to review payment activity and determine when reporting obligations may apply, rather than having to reconstruct payment data later. The goal is not to make patient payments efficient, but also to ensure the appropriate records and information exist so that reporting requirements can be supported when necessary. Ultimately, integrating the tax reporting considerations into the payment workflow helps reduce administrative burden while compliance for sponsors and sites is still supported. However, it is also important to recognize that tax reporting requirements can vary significantly across different countries. While the United States has specific reporting thresholds, other countries may have different rules depending on how payments are structured. Because of this, organizations running international studies need to ensure that they have consistent ways to track that payment activity across all of those regions. What Scout helps provide is the infrastructure to accurately track patient payment activity and maintain the records needed to support reporting whenever it's required. This helps sponsors maintain visibility into taxable payments while still ensuring that reporting obligations can be addressed appropriately depending on what country is involved. Now, on the flip side, tax reporting also matters for patients themselves. Patients deserve to understand what their compensation means and whether it may have any reporting implications. When tax reporting is handled properly and information is collected when it's required, it helps prevent any confusion or any unexpected issues later on. Patients are already making a very important contribution by participating in this clinical research, and the payment experience should truly be clear and straightforward. Ensuring that tax reporting is handled correctly is an important part of creating that experience for all of our patients. Now, at the end of the day, tax reporting isn't just about compliance. It's about creating a payment process that works smoothly for everyone involved. When taxable payments are tracked properly, and reporting can be supported whenever it's needed, sponsors and sites can avoid any last minute surprises and reduce any administrative burden. At the same time, patients can receive their payments with confidence and clarity. And here at Scout, our goal is to make patient payments as seamless as possible while still supporting the reporting and compliance requirements that comes along with them. And by us being able to track these taxable payment activity and supporting the tax reporting whenever it applies, we help sponsors and sites manage these obligations while still ensuring that patients are receiving all of their payments clearly and efficiently. So thank you for taking the time to learn more about how Scout supports tax reporting. We look forward to continuing to support sponsors and sites and patients.